Yesterday's consumer price index showed that the cost of shelter, which includes rent, grew by 0.4%, putting it up over 5% from this time last year. So it's now a good time to invest in real estate. For more, let's bring in Lauren Hochfelder, who is the Morgan Stanley Real Estate Investing co-CEO. Great to have you here with us, Lauren. First and foremost, a lot of people just trying to figure out how much they should be allocating, if they are allocating a real estate investment here. What's a good way to get an entry point in?
So, hi, Brad. Thanks for having me on, and always love to talk to you about real estate. So, look, we think this is a really, really interesting time to be investing in real estate. We're 2 years into a real estate correction, and you're seeing broad repricing across the board. There are certainly some assets that are distressed for a reason. We tend to stay away from those. But across the board, there are a lot of asset classes that are really interesting, performing quite well in terms of income growth, et cetera. And yet they're pricing off materially 20, 30%. So we think it's a really interesting time to get in.
Let's kind of drill down on it, because real estate, very broad. Are we talking single family, multifamily, rental units? What is it that is seeing the most kind of demand, or the most opportunity, at least, as an investment mechanism?
Yeah, so we like to invest behind broad mega trends that drive demand through cycles. And so some of the mega trends we're focused on today are continued growth in e-commerce. I heard your conversation about Walmart e-commerce sales, and that absolutely, as a trend, continues, and that drives a lot of demand for those warehouses that get those goods to our front doors every day. So that's one. The second is a complete realignment in the global supply chain. So simply put, the supply chain of the last 20 years will not be the supply chain of the next 20. We're doing a U-turn on globalization, all these event-driven supply shocks. And again, as companies are forced to rebuild their infrastructure in response to a realigning supply chain, that too drives demand for warehouses. The third is, look, we have aging demographics. As a population, we are aging, and that is changing our housing preferences and needs. So there is a lot going on. And in real estate, you have to distinguish between changes in interest rates and changes in how people use space.
I want to linger on that for a hot second here, and the changes in interest rates. How is that weighing into the decision as people weigh real estate as an investment mechanism and asset type?
Well, look, real estate is a levered asset class, and of course it is heavily impacted by interest rates. I'd say that we like to invest in a way that we can perform through any interest rate cycle. Today you're seeing a lot of asset owners who acquired assets and financed them heavily in a very different interest rate environment, and they are getting squeezed today. They have maturities coming up, and they cannot refinance that debt at the current levels, and that's creating pressure in the system. We focus on having durable capital stacks that enable you to get through any interest rate environment. And frankly, we focus on investing in real estate where you can really push income growth, where you can grow your top line in excess of any rate expansion.
When we think about real estate investing, it comes back to one word repeated 3 times continuously: location, location, location. And for any of the types of real estate investments, whether it is looking at warehouses, whether it's looking at even the build out of data centers or even multifamily homes, all of these things considered, it still comes down to where those are placed. Is there a hot spot where you're seeing investors kind of flock towards in their calculus of the locations that are best serving for this as an investment strategy?
Absolutely. Look, first, I'd say on a global basis, I do think the U.S. is really the most interesting place to invest today. But let me say, you're absolutely right. It was ingrained in my brain, location, location, location. But I'd say today it's actually, of course, location is paramount, but I would say it's dislocation, dislocation, dislocation. You have to look at how things are changing, whether that's where people are moving. So, I would have said 20 years ago, you want to own assets in New York City. And Certainly, there are some you still want to own here, but people have migrated, right? People test drove a lot of different things in COVID. They test drove different working conditions. They decided they liked working from home. They test drove different markets, right? So Miami, Dallas, some of these markets to which people moved really changed the location of where you want to own real estate.